Hi traders, this is Obodo FX community. If you're new to this channel, you are welcome. In today's video, you are going to discover the unrevealed trading magic of Gbpjpy. And remember, this doesn't only apply to Gbpjpy, to any forex currency pair. But for the sake of this video, we are using Gbpjpy as our point of reference. Most of these phenomena are not something new to you. You might have probably come across them, but at the end of this video, you will have different perspective point of view. To start with, trend line. Trend line, of course, we have an uptrend. In an uptrend, these are some of the scenarios, some of the phenomena that always takes place. Okay, case one. Take a look at the chart in front of you. In an uptrend, for us to establish our trend line, we always what? Connect two lows, point 1, point 2, in order for us to establish our trend line. After which, we are expecting the third touch on a trend line in order for us to take an entry position. Okay, but ask yourself, what if it doesn't happen? For example, in the case here in front of you, as you can see, there was an obstruction. We have resistance. As price came, it retested that resistance, you see, broke to the upside, came, retested, and price continued shifting all the way to the upside. So if you are that type of trader who will be waiting, because you've established point 1, point 2, you are wholly and solely waiting for the third touch on the trend line, that's not going to happen. You see, and this phenomenon always takes place in the market. You see, instead you can look for the trend line intersection. As you can see, we have resistance, where the trend line and the resistance intersect. That would be a perfect trade setup because we have trend line intersecting with our what? Resistance. Resistance broke to the upside, retested, boom, price then took off. Take a look at case 2. Case 2, some of you might draw trend line in this manner, in a very steepy way. And remember, steepy trend lines are very unstable. So if you are used to drawing such kind of trend line, avoid, because they are not stable. Take a look at the next trend line. Point 1, point 2, we establish our trend line. You see how this trend line is very slopey. These trend lines are very what? Stable. As you can see, how many times price bounce and move to the upside? 1, 2. Case 3. Take a look at this one. Gently slopey trend line. Price always respect them. Point 1, point 2, we establish our trend line. Point 2, price can bounce. That's the first opportunity. The second opportunity, price then also bounce to the upside. Case 4. The same scenario. After you establish your trend line, waiting for the third touch, what if it doesn't happen? Take a look at your support and resistance level as well. Wheresoever they intersect, that will be a perfect entry setup for you. For example, as you can see, this level, we have our resistance. Resistance got broken to the upside upon retesting. Remember, we have our trend line also intersecting at that price level, and price then took off. And then the last case, you see, here we have what we call divergence trend line. You see, when you establish a trend line in a downtrend on a lower lows, as you can see, and then each time price bounce on that trend line, it goes the opposite direction. You see, hence we call this type of trend line divergence trend line. You see, after we establish point 1, point 2, when price came, hit it, it then bounce up. For the second time it hitted it, it then bounce off. Next, in a downtrend, you always make sure you connect two highs, point 1, point 2, in order to establish your trend line. Okay, after that one has been accomplished, you wait for the third touch on a trend line. Okay, but take a look at this scenario here. As price came for the third touch, you see, take an entry position from that third touch on a trend line would have been a massive drawdown, you see, even though it was going to hold. But take a look. That's why you always have to make sure you look closely. We have our support point, you see. When price came, it then traded through our trend line, respected the support, and what? Bounced back into the trend line. Case 2, for downtrend, you see, gently slopey trend line. Market tends to respect gently slopey trend line. Take a look at this, how slopey this guy is. Point 1, point 2, we establish our trend line. For the third touch, it bounced down. Second, it then bounced down. Finally, case 3, you see, point 1, point 2. For the third time, it bounces on the trend line, bounce back down. Point 1, point 2. For the third touch, it bounces down. These phenomena, they always occur in any currency pair you trade. Case 4, take a look at this level. You see, 1, 2. This is what we call diverging trend line. Okay, you draw on two highs. As price come, hit the trend line, it goes the opposite direction. Hence, we call this particular type of trend line a diverging trend line. Okay. Next, trend line break and retest. Point 1, point 2 are used to draw trend lines. The other points are for what? Buying and selling. After point 1 and point 2, we're expecting point 3, otherwise it will break and retest. Take a look at the chart. Point 1, point 2, we use it to establish a trend line. You see, each time price bounce on it, we're expecting a what? An opportunity. The first time it bounce up, the second time it bounce up. Okay. But what if it doesn't happen? Like for example, in this scenario, we establish our first point, second point. We're expecting for the third touch in order to get an entry opportunity. Otherwise, it breaks to the downside. And immediately it breaks to the downside, you wait for the retest. Right there, the retest. And then price continue to shoot all the way to the downside. Take a look at case 2. We have point 1, point 2. We establish our trend line. Okay. Point 3, price bounce up. Point 4, it bounce up. But all of a sudden, it broke to the downside. You see, at that point, it came back, retested, and dropped all the way to the downside. Take a look at this other scenario. We have our trend line here. Point 1, point 2. Point 3, it respected, bounced down. Point 4, it also respected, bounced down. For the 5th time it came, respected, bounced down. Remember, gently slopey trend line, price always respect them. This time now, at this point, price never respected that trend line. It broke to the downside. Immediately it broke, you watch out for the retest. On the retest, it then shot up. Take a look at this other scenario. Here as well, the same thing in a 4-hour time frame. Point 1, point 2, point 3, it bounced down. Here, it broke to the upside, trend line got broken. Upon retest, it then moved to the upside. Take a look at this one as well. Point 1, point 2, we establish our trend line. Point 3, we're expecting what? An entry opportunity. Otherwise, it broke to the downside, and you see where it came and retested. It tries to retest at this level, but it didn't. It fails and it shut down. Here it came, retested, and finally it gravitated all the way to the downside. Let's dive into more examples. Take a look at this setup in front of you. This was a trade which I personally took. If you noticed, we have our trend line from this point. Okay, it got broken to the upside. Upon retesting, that's an entry opportunity. Also, we have another one which originated from the bottom, point 1, point 2 for the third touch. So you see, I've gotten two confluences which led me to take this trade, you see. Take a look at this other setup in front of you as well. We have point 1, point 2. For the third touch, we're expecting price to what? Bounce and move in that same direction. Otherwise, trend line got broken to the downside. Upon retesting, it then finally gravitated to the downside. Remember, you also have your support at that level, you see, which is even serving as a confluence. Remember, support broke, retest. Trend line broke, retest at that same price level. Take a look at this other scenario. Point 1, point 2. Expecting point 3 to continue moving in that direction. Otherwise, it broke to the downside. Upon retesting, it then gravitated all the way to the downside. Also, at this point, we have some mini level of what? Support, which got broken, retested at the same time. A double confluence. Take a look at this level as well. The same thing here. You see, trend line 1, 2, trend line broke. You see that candle which broke to the downside, retested, drop. These are more examples. I'm just showing you more examples. Each time you open any of your chart, whatsoever currency pair you trade, these phenomena they takes place always. It just depends on the individual, how you look at them, how you utilize them. Okay, if you are using them the wrong way, they will produce a very bad result. Okay, take a look at this level. We have our trend line, point 1, point 2. For the third time it came, it bounced. Second time it bounced. The trend line from the up, you see, point 1, point 2, point 3, it bounced. Point 4, it neither respected. It broke to the upside upon coming to retest. You see, right there would have been a buying opportunity. Immediately, trend line broke to the upside upon coming to retest. You see. Take a look at this one as well. Point 1, point 2. Okay. Point 3 here at this level. Market then shot all the way to the upside. Take a look at this setup in front of you as well. We have our trend lines originating from this point, point 1, point 2. We've got our trend line. For the third touch, you see, right here is an entry opportunity. The market then shot all the way to the upside. Point 1, point 2, point 3, boom. Point 1, point 2, we establish our trend line. Point 3, you see how the market then reacted. Later, it broke to the downside. While waiting for the retest, what if it doesn't happen? Because there must be an obstruction. If that one doesn't happen, here, if you notice, we have our level of support. And when support broke, it forms resistance. You see. So right here, intersection got retested. You see our trend line got broken to the downside. Also, our level of support and support level got broke to the downside. So at that point, this point is our intersection. Right there, a very good setup with a confluence. You see, support got broken, trend line got broken. Where they intersect, the price line is your entry setup. These phenomena they takes place always in the market. Let's see, here are more examples. Point 1, point 2, trend line got broken at that point, retested. You see how vigorously the market then dropped. Take a look at this one as well. Point 1, point 2, trend line got broken to the downside upon coming to retest, it falls back. It broke to the upside, retested, and moved to the upside. Here is another one, point 1.2, trend line got broken. Here it came retested, drop. Finally, it broke to the upside. Upon coming to retest, it then shot all the way to the upside. So this one, I'm just showing you that these phenomena, they takes place always in the market. There will be a special video wherein we will dive deep into each and everything I'm showing you here. All you have to do is to subscribe, so as to the subsequent videos you won't miss out on them. Okay? And lastly, take a look at this one. Point 1, point 2, we establish our trend line. Point 3, whereas waiting for the third touch, remember we also have our level of support at that point. You see, that intersection is an entry opportunity right there. So the next video, I don't want to make this video very long. So this video will be into 3 series, okay? So watch out for the second series, wherein I will show you also some of the phenomena that happens near our level of support and resistance, also weak rejection. Stay tuned and I'll be right back.